All right. Um, we can see gold is like ranging in one place till yesterday, but we can see a confirmation of sell because immediately the market break this overall bullish trend line. Let's go back for retracement to retest the level and then try to come down to break this breakout. So we expect the market to continue pushing to the downside, but we can see the market is ranging. So we know, like, the December, the market is not really consistent. So
Okay.
we have to wait and see uh what's the next movement. But we expect the market to push to the downside. Maybe it's going to respect this level, or maybe it's going to respect this. So anyway, anyone that respect and continue pushing to the downside, I'm pretty sure we can continue going down. Nothing is here. It's just a shadow, so we can't do anything there. Now let's take a look at the GBP. GBP. I think I have to take it to take 4. Page 4. Wow, still going down. Let me open this so that you can see the screen clearly.
Okay.
All right. So this is the downtrend, like it's just starting. That's why we do not draw the trend line. We can see I think this is what we expect the market to be doing. To keep on following down of this quarter trend line. But I think we hit our first take profit on this. On GBP
Yes.
because that's the entry. When this candlestick come and close below the trend line, because when I break the major level, I retest and then break it. So I also break the fake out, which is the first breakout. You can see this is the first breakout. So when the market
Yes.
tested the level, break and then retest, so it's come back and break the first breakout. So the next thing we need to break is only the trend line, because overall is bullish. And then this is a signal of bearish, right? So for us to get confirmation of the bearish, we have to break the counter trend line. So that's the counter trend line that we break with this candlestick around here. So immediately the candlestick close, here is our entry. That's why I plot this. And you can see we started coming down, go back a little bit, come down. We come and tested the major level. So that's why we put our stop loss above the major level, because always the market used to do that. Even you get your entry, sometimes it used to come back and respect those previous level before continue pushing to the downside. So when you put your stop loss above your major level, you're safe, because whenever this market come and break above your major level, is no more bearish, right? Is bullish. This is bullish signal, because we break above, we break the support level. This is the resistance level. I hope you understand. So now we break the counter trend line with this candlestick and we take a sell. So the market come and respect this level before continue pushing to the downside, and then go back for a little retracement to respect this, and then continue pushing to the downside. You can see it's still respecting those levels in the previous. That's what the level is respecting. Like, it's not going to leave anything before going down. But sometimes, when the market is too much volatile, it used to just go down without respecting those levels. So we don't know. We don't know which one is going to happen. That's why we can plot our stop loss above our major level, and then we can use those rejections level as our take profit to save profit. And whenever we hit our second take profit, we have to move our stop loss to break even, not first take profit. Like first take profit is very close, and mostly first take profit used to go back and retest those level before continue pushing to the downside. But whenever you hit your second take profit, so even the market will go back, maybe it will go back to the first take profit and respect the level before continue pushing to the downside. So that's why you,
Okay.
yeah, that's why it's the time that you hit your second take profit. Is that time that you can move your SL to break even, at least maybe somewhere around here. So I think we have done with this, so we can keep on waiting. I think you are not on the signal, but it's all right.
And since I didn't join from the top, it's only GDP I joined yesterday.
All
And I
right.
use small lots because I use 0.05 because I
Oh,
know I didn't
oh,
join from the top
yeah.
so I'm just being carefully.
Yes, exactly. You have to be very, very careful. Euro dollar, like you can see what we do on euro dollar. Like, let me let
Okay.
the screen clearly so that you can see it. All right. So the time that I analyze a bullish trend on this euro dollar, you can see like a lot of consolidation plays. So what happened is, let me show you what happened, and then what make it all right. So the market is in downtrend. Immediately the market hit one of our major level and tested it. It's break above and come back for retracement. So it didn't go back and break below. So you see, it's no more bullish. It come back to bearish. It's go back for retracement. It's come back. It did not break the fake out. So the market go back again. So the market is an engine inside the major level. Go back, come back. We do not even break this first breakout, so it's just consolidating in one place. So immediately I break this, then I check out the previous, I see there is another rejection, so that's why I draw this, and then wait for the market to like finish consolidating, because I know major level, mostly when the market come to major level, it used to do something like this, like to be ranging, so much ranging in one place before moving to the upside. So that's why I don't want to buy early. Like you have to be in profit at least whenever you place a trade. I don't want waiting in loss. You understand? Like you enter a trade,
Yes.
even the trade is bullish, even it's going to hit your take profit, but the market will keep on consolidating in one place, and if your entry is not pretty clear, like you will have been in loss, and then you keep on being in loss for more than 3 or 4 days, like it's kind of bad. So that's why I don't do that. So that's why I draw this and I draw this. I say I have to break all of this before I buy this market. Even I buy like from the early, I know the market is going because I can see a bullish, but because I do not get my confirmation. That's why I'm telling you about your confirmation. Like you don't need to play with anything. Whatever
Okay.
is your rules, you have to follow it like very carefully. So immediately the market break with this candlestick. So then that's when I draw this bullish trend line. I draw it there. So when the market break, I can see the downtrend trend line. Like I do not break the downtrend trend line. You can see the trend line for the overall
Yes, I
bearish.
can.
So that's why we see the market has been consolidating around here, because I do not break this trend line. The market is trying to come and break it, you understand, before going up. So, and then it's not just coming to break it like this. So that's why we see the market is an engine in this place. So finally, the market come and break it. After breaking this, then the next thing I need to break, we say trend line, and this is my trend line. So I also break my trend line. So the market come back for retracement. I say, then I come and plot my entry around here. The reason, okay, I think this thing shifts a little bit. This is where my entry is starting. I think. when I break above, I can see the market reject above, go back for retracement, and then break this breakout. You can see this candlestick, like this candlestick is better than this. So I break above this because this is the first one. So that's why I use it as my level, and then I place my trade. I put my SL below my major level, and then my take profit all the way to the upside. And as you can see, like it just goes up. You see, like without consolidating in just one time, the market. So when the market come here, I started consolidating, and that's why when I draw this, I draw this like this. I say if the market is no more bullish, maybe the market will start to fall down because I can see some fundamental news. Euro dollar is going to fall down in some times. So period of time, and I guess is the December. So that's why
Okay.
I draw this. I say if I'm going to break, if I'm going downtrend on euro dollar December, then I have to break my trend line. So I can see my trend line around here. And then that time the market is here. So I said if I come here, maybe I will be consolidating the way I do in the previous. You remember, before I come and break this trend line so that I will sell. So that's why you see I draw this like this and then come back and retest this, then go back and retest the minor level. So okay, this did not even hit. Like this is how I draw. I expect the market to do this, but the market did not do it. The market kept on consolidating in one place, and this is I think my third take profit. Okay, my second take. This is my second take profit. So the level is very strong. That's why you see the market is consolidating so many times in the place. But finally, the market hit our minor level, which is our last take profit, and then we are out of buy market and then ready to sell. So then the market come down, break below, go back for retracement. Like this retracement that you can see, the body of the candlestick, the shadow of the candlestick, you can see it touch the minor level, but the body did not touch it. So in H1, if you scale that in H1, even the body like touch the minor level. You get me? So it's in H4 that the shadow touch it, but in H1 the body also touch it. So it touch it and then come back for retracement, but I do not break this, so I'm consolidating, but finally break it. So when I break it, we said I have to break my trend line. So, and then I break my trend line, the market go back for retracement and then come back. So all the way to the downside, it started coming down. You see, it's just coming down clearly, like no more consolidation, only creating higher high and lower lows all the way to the downside. So simple and straightforward. Let's take to look at what next pair. All right, Euro AUD, Euro AUD. All right. So Euro AUD, I finished selling. I finished selling here around here, and then the market break below my major level, as I always tell you, and then go back for retracement to retest the major level. Come back. We said we have to come back and break the first breakout, right? But the reason why you see we don't need to like break a trend line around here is because the overall of the market is already downtrend. So that's why we are overall downtrend, we are going down. So here too is also a downtrend. That's why we just, so we can try and plot this. All right. Can you see this?
Okay. Yes.
All right. So overall, we are in downtrend. Like you see, this is clear downtrend. So the market break below your major level and then go back for retracement, retest the level. This is the highest move when the market break below, right? This is the highest move. So that's why we
Yeah.
draw this line around here, and then that's why we are going to use it as our entry. So this place will be a consolidation area, because maybe if the market did not break this, maybe the market will come and respect this level, go back, come back, respect this level, go back. Like, you don't know when the market is going down if you do not break all those places. Maybe if you see the market coming, maybe it's going to respect one of those places, but immediately we break, like we break this place. So we have done respecting, even we have not done, but we are pretty clear that the market is going down because it has break this level, so it will continue going down. So even the market go back and retest the level, you don't mind, because your SL is above your major level, right? So
Yeah.
that's why that's why we use this place as our consolidation area. Now, if the market come back and then come here and break this first breakout, which is the first candlestick, like even if it's this candlestick that just come like this one, just come and break it just below a little bit and close below it, like if you break, if the candle, if you are using H4, you have to wait for the H4 to close, not just if you break then you can enter. Sometimes you will break, if you enter then the candlestick will go back, you understand? So that's why you have to
Yeah.
wait for the candlestick to close and open another one. So that's when you can enter. So that's when I will send you guys signal in the group. You understand?
Okay.
Yeah. So let's take to look at one pair before we go for analysis. I said today we are going to analyze one pair together. You're going to tell me what pair. I gave you the,
Oh, okay.
yeah, I gave you
I
the,
can choose anyone. Okay.
yeah.
Card CHF. But
All right. Cat CHF. I think I have something on Cat CHF, but all right, I will see. I will look for it. So this is when the people are saying euro dollar is downtrend, it's not going up, it's not going up. And then you can see, like every May I'm in downtrend, I'm going down. But when I hit my first and second take profit, you can see the shadow of this candlestick touch the second take profit. So
yes.
I move my stop loss to break even, and then the market start to go back and hit my stop loss. So I know that I'm no more bearish. So that's why I started drawing this trend line for bullish, and then the market break above my minor level, come back for retracement, retest the level, go back and break the first breakout, which is the fake out. So I take a buy all the way to the upside. They're saying it's not going, but I make like a lot of money from it. I can see the buy, because the buy is just a little, it's just a retracement before, like it's trying to respect just level before continuing pushing to the downside. So it's very, very possible to market hit here safe. So that's why we don't need to miss this, because we can see the direction. Because you are in overall downtrend since 2013, it's not that you cannot buy. You can buy if we see opportunity. All right, I think we are going for analysis right now.
Okay.
At CHF. All right. Wow. This thing is ranging. We don't know why it's ranging. Maybe the market hits
Yeah,
up.
it's been waiting for a long time.
Yeah, I can see it's ranging. Maybe it's because of those levels. We can see rejection in the previous, like, but overall it's downtrend.
Okay.
Overall it's downtrend. So let's take to start. Like, you come up to your trading view. tradingview.com and open your chart. So the first thing you need to do after getting your favorite tools like mine, as you can see this horizontal line, Fibonacci, text, major level, short position, rotate rectangle, long position, horizontal line, trend line, and arrow. So after getting all this, you come to monthly. We can see the overall is downtrend, but also the current month is downtrend. The last month is downtrend. The last 2 months downtrend, right? So
Yeah.
I think we are selling this thing. Sorry, I think we are selling. That's all you need to do, like in monthly time frame. I tell you, like monthly time frame is for candlestick pattern. You need to look at like the current month and the last month. You understand? If the current month is bearish, you are selling. If it's bullish, you are buying, right? So overall of the market price action is bearish, and then current monthly is bearish. Also, market price action of weekly is bearish, but current week is like the market is ranging, as we said, is still ranging.
Yeah.
Maybe because of those levels we can see it's a level, so maybe that's why the market is ranging. But we can see like the market break below this place, so we cannot do anything here. All what we need to do is after coming to the monthly time frame and seeing your overall price action and the current month, so that you know what you're doing, then you can come and identify your chart pattern in weekly time frame. You need to see the previous. It will help us track a lot. Wow, so much movement in this place. But I think I just need the current region because I can see different movement like in the previous. There is nothing in this place. This is just the overall trend. All right. So this is your weekly chart, right? So
Yes.
this is why you use to identify your chart pattern. Weekly time frame for chart pattern, and this is where you can plot your major level. So how you are going to plot this your major, that's what I'm going to show you right now. So as you can see this, like let's just use this. As you can see, this market like started trending up all the way to here, and then we can see a break below and retest and then break all the way to the downside, right? So this place might be a level, but you need at least 3 of it to make it a major level. I hope we get this.
Okay.
Like this is a downtrend. The market is trending down. But when the market hit this place, because this place is a major level, so the market try to break, start ranging. So finally, it's started breaking all the way to the upside, but did not go all the way to here because maybe the retracement is just a Fibonacci retracement for this overall movement before continue pushing to the downside to come and respect this level. So this place also might be a level if you get 3 or 4 of it in the next, like in the future. You understand? So
Okay.
future and the previous, like you can look at the previous and you can look at the future. You can see there is the same thing. Is there the same thing? So this is your major level. You understand? This is your major level. Those places that the market used to reject and change movement from downtrend to uptrend, from uptrend to downtrend. You understand? Anywhere the market is changing movement, that's your level. You can see this place, this place, this place, this place. So this place may be your level because you can see it's a rejection place. It's very, very strong. That's why anytime the market come, used to test it and go back, test it and go back, test. So it's your level. You understand? It's your level. So then you can look at the current, like if you use it as your level, let's say, let's just plot it. I don't like this thing to be thick because if you scale down to the daily and H4, you can see them very, very big. But not thick. All right. So can you see this?
Yes.
All right.
Touches on it.
All right. So when the market come, this is a downtrend, right? It tested this
Yes,
level,
sir.
go back for retracement, retest it, and push all the way to the upside, right? But we can see a shadow of this. So don't mind the shadow. We always care about the candlestick, like what the candlestick do. Understand what the body do, not the shadow. So
Okay.
shadow test it and then go back for retracement, retest and go back. So one. And then come here, tested it, go back for retracement, come back and break all the way to here. So come back now, break it, right? So we break it here. We come back, we test, like still is a level. So that's why we said your level, like you can sell or buy in your major level because you can see like it's just buying around here. But when the market come and break it, it's trying to create sell. This is a resistance, right? You can see, and this is a support. So that's why we say if we break above, we are buying, and if we break below, we are selling. You understand? So
Okay.
mm, now we got one major level, I think. So now let me clone this. I have to take it to the next level. All right. I'm just doing this. And then clone this. So this is just a fake out. If you see a fake out, you can just draw something like this.
Okay, line on it.
Yeah, just a line on it. All right. So next major level. All right. Next major level here. Then another one. Another one here.
Okay.
Yeah. So we got 1, 2, 3, 4, 5 major levels, right? So now let's take a look at our current region. I have to open this. Shift it so you can see it clearly. All right. So now you get your major levels. You get your major levels. So as we can see, like when this market, let's start from here. This market break below, go back for retracement, come back, but did not break this fake out because the level is very strong. So it go back again. If we scale down to daily, this place may be a minor level. Because even it when the market come here, you can see like it's trying to respect those levels because the level is very, very strong. So that's the level, like that's the level that stopped the downtrend and create an uptrend around here. The market come back and retest the level and then go back all the way to here, but we did not break this fake out. So the market come back and then come back all the way to here, we break it. So, but this is, we don't trade here. Like we are just trying to see, it's all the same thing. You know, the market is doing the same thing in H1, in H4, in daily, in weekly, in monthly. Like all the market is doing the same thing, but different tools, different peoples with different signals, different identify. People are identifying the market in many ways, you know. So you only care about your own way. That's where you can make your own money, right? So you can see when the market come here also, tested the major level, break below, come back for retracement and break the first breakout, which is a fake out, and then we can break the trend line because if you can draw the trend line around here, let's draw it.
Okay.
You can see a trend line. If you are drawing your trend line, you need to watch out. If you are drawing your trend line, like you can start from the shadow if there is a shadow. If it's a body, you can start from a body. The first and
Okay.
the second, if you get a first and the second touches like this, so it's okay. Like you don't need to force it. You need to catch the first and the second touch like this. So it's okay. Then you can take it all the way to the upside. So anyway, you see the market break, so it's not good. Like it's not that if you are drawing it, if you see the market do like this, then you can do like this, or you can do like this. No, you just need the one and this two, like this. So if you see the market did not respect here and break it, so that's the market is not more bullish, right? And as you can see, when the market
Okay.
tested this level, come back because of this trend line is strong, so it pushed the market back. That's buyers, and then the sellers push it down. So they break it because the sell is very strong. You understand? So and then you break the fake out and then you break the trend line. So you sell and all the way to the downside, you make profit. You understand? Like
Yes.
all the time frames is the same, is doing the same thing, but you cannot just trade here because you are just starting. I hope you understand. So
Yes.
uh when the market come here also tested this level, break above, I think we are buying, but the market did not just go up, so it come down and break below. You can see, like, you see the market, you can see the shadow, break below, but the body is inside, right? So if you scale down, this is weekly, and then we are not trading in weekly. If you scale down to H1 and H1, you can find out this shadow that break below, like, is a body of this candlestick that, like, that break and retest and then break. You understand?
Yes.
Yeah, the reason why you do not see the breakout and the retest outside of here is because is higher time frame. So that's why we say we don't trade in higher time frame. You see the disadvantage of trading higher time frame. But in that's why, yes, this one, like this movement, this current movement, if you can scale down to H4, you can find out this candlestick is outside of this level, and then you can find out a lot of consolidation before the retracement, and then you can find out it's not just like this, but you can see it, like you can see a pretty signal around here. The market go back for retracement and come back then all the way to the downside. Pretty clear sell. So when we hit this, also when we hit this level, the level, like it might be this shadow, might be a candlestick in daily time frame or H4 or H1 that touch the body of the candlestick. So maybe we say maybe we are going to get one minor level around here. So maybe we get a buy that come to the minor level. That's if we scale down, that's what we are going to see. But in weekly, you don't need all this. Like you just need to pull out your major level. If you pull out your major level, it's okay. You have done with your weekly. All you need to do is just scale down to daily and pull out your minor level. But I'm just showing you this to know that the market is following the trend, and then that's what you are going to do, because that's what the market is doing. Like from the monthly, from the weekly, all the way to daily, H4, H1, the market is doing the same thing. So you need to do that thing to catch this market. I hope you understand.
Yes.
So now you see this consolidation that we see, like on daily, right? Let me try and get one minor level around here. I tell you, we have to get a minor level around here. I use rotate rectangle for this. You have to plot all this in your trading view.
Okay.
Yeah, if you have question, you can ask me, then I will guide you how you can do it.
You use a different color so that you can tell the difference.
Yes, yes,
Okay.
yes. So, uh, as you can see, I think we can only plot this one because it's the only most significant rejection level in daily time frame. We don't need to see the previous because we are currently here. We're only trading the current region. So we have one minor level and then two major levels, right? So what's going to happen now? Now we have done with this. Now we can scale down to H4. That's all you need to do. Like in
Okay.
weekly, you plot your major levels, and in daily, you plot your minor level. All this explanation that I show you, is just a class to you so that you can learn something. All right. So as you can see, wow. All right. So trend movement. After the market finished ranging to the upside, tested the minor level, it's break below and go back for retracement. This green candlestick, one candlestick for retracement, and then come back and break it. So you can set a sell around here. Like you can set a sell around here.